Hello guys, and welcome back to a brand new video by Vertex Investing. Now this video is actually a question that was raised a few times, and I thought I'll address the situation and let's explain how to help your psychology in terms of holding trades, because holding trades is a skill in itself. Also, I'd like to say thank you to everyone who subscribed, and also thank you to all the messages that we receive daily about our free content. Now that we've released the Follow the Money video, which is basically everything that you need to know in order to master smart money, you just need to put everything together in terms of understanding the lower time frame change in trend and understanding the higher time frame bias. Before I get on to that, I just want to address a situation that was raised. So recently our course was leaked, and it's raised us some questions about the strategies that we offer. Now, if you watch the webinar, you will obviously know that at Vertex we actually offer so this is the Discord. At Vertex we actually offer a few strategies. Now, before we implemented smart money and before me, Ben and James actually came together, we were all trading separately. Now for me personally, I was always trading. You can actually read this psychology section. You can pause it if you like. But we actually traded very separately. And for me personally, I always traded mechanically. Now what it is, those strategies were giving me a very good return. They were very consistent, and they were, more importantly, they were an effective edge, which is why we actually didn't remove it from the strategy. Because at Vertex, we don't want people to focus on something. No, we don't want people to be forced to focus on a certain way of trading, because there's so many different ways, and there's so many ways you can be profitable as a trader, and we want to be able to offer several ways that you can actually succeed as a trader without forcing you to be to try and replicate everything that we're doing. So at Vertex we actually have so these two strategies, these two sections is a smart money concept, right? And that is our rule-based method to smart money concepts. The next one, so the EMA strategy, is something that me and Ben have come up with, and we found a very strong edge, and he actually passed an FDMO using that strategy. The price action strategy is something that I developed when I first started, and I found it was very consistent if you struggle with time. So because when I was working full time, it was very difficult for me to actually trade effectively, and price action was probably the best way for me to go about it, and it was a rule-based method to do it as well. The engulfing strategy, now this has always been my favorite strategy. It can give you a consistent 1-to-4 risk to reward ratio. And again, this was very consistent, and given the fact that I was working full time, it allowed me to be consistent. Now that's why, because not all traders, obviously new traders, we have a lot of people who are joined our community and are working full time. So we wanted to offer different things that they can use that works for them. But our main focus is our order block strategy, and everything it's in its own individual section. Now in terms of being focused, like if you join as a student, you obviously get full focus, and regardless of whatever strategy you use, each strategy has its own section for support, where you could filter through which ones you want to focus on. However, as mentors, me, James and Ben, we will support you on any strategy that we use. So that's what I wanted to address, because the EMA, the price action strategy, engulfing strategy has nothing to do with the order block strategy. It's just an add-on should you wish to want to learn it. It's completely up to you if that is what you're up to, if you want to do. But that's the whole point of Vertex. It's for basically helping you achieve your Vertex. And if you don't know what Vertex means, I suggest searching it so you can get an idea what it means. But it's essentially reaching your peak and finding who you are as a trader, because I'm not going to force you to trade exactly like me, because sometimes some things that some traders do, it might not work for you. So we want to offer different things that we can work on together and find what you find is profitable for you. But I just want to address that, just so I don't want to cause any confusion. And and also another thing is, a lot of questions that we get is what is different from us compared to other smart money concept groups, because there's so many out there, and there's so many great ones out there. To be fair, I'm not going to name them here, but I'm sure most of you know. The main difference is there's so many confluences, which I'll speak about in another video actually. But there's so many confluences like videos, trading, not videos. There's so many confluences like volume, what sessions you're trading. Let me get rid of that actually. What sessions you're trading, ranges, how to refine OBs, imbalance. There's so many things to take into account when it comes to order blocks. Even Wickoff or Wickoff, however you want to say it. Actually, I should learn how to say it. Actually, I think it is Wickoff. But the thing is, what we've done is essentially, as I said, as a mechanical trader, I've tried to find what statistically happens to give us a strong edge, and we've basically nailed it down to two rules, which, again, whether you believe that or not, I don't really care, but that is essentially what we're doing at Vertex. That's the only difference. Other than that, the concepts that we taught here on YouTube for free is enough to be sufficient. You don't need to join us. And as I always say, we're not claiming to have this sort of secret. There's no holy grail to this. It all comes with your effort, and your effort will pay off. I can assure you that if you put the effort, if you put the time in, it will pay off. And I hope that our videos are helping you in any way. But let's talk about holding trades. So I know I waffled a little bit. So say for example, you've just got into, let me close this there. Say for example, you've just got into this trade here, right? So say you've got a good change in trend, you've got good confluences of momentum, volume, everything like that. You've found a perfect OB and you've got a perfect entry. But what tends to happen is sometimes you see a trade, it starts to plummet like this, and you're thinking, oh, do I close the trade? When you get a sharp spike like this, when you get a big move like this, actually let me give myself a little bit more space. So when you get a sharp move like this, you are expecting a big pullback, right? And then you see price is starting to come back towards your entry, so slowly coming, and it's slowly just making its way back, right? Which actually that was a very bad example. Let me get rid of that. What you'll see is you'll start to have a quick pullback, right? Which is fine, but at this point, I don't know why I keep doing that. There we go. Apologies, let me get rid of that. So when you get a sharp spike like this, you should expect a pullback, right? Now this pullback, say for example you're risking, at this point you're running at what, like 10%, and then you see a pullback and you just basically lost a gain of say 8%. So you're running at 2% at the moment. You're probably questioning, should you close the trade? And the answer is no. Why? Because if you have a set of rules, and if the rules aren't met for you to either close the trade or for you to place like a buy if you're selling, then why should you close? If it hits break even, it hits break even. You haven't lost a trade. Okay, and this is the part where people start to struggle with, because this pullback, right, is going to happen. Regardless, it's going to happen. But if you know that what phase you're in, and this is where Wickoff comes in, because you have to understand that market runs in phases, right? Okay, you've got distribution, and you've got accumulation, and you've got the bits in between. So for example, you've got say a distribution forming from here, right? And then you have a big move. Well, you have a move like this coming, and then what happens is price starts to slow up, and then you start getting something like this, and then the same thing happens, and then you enter another cycle, right? Now I did do a Wickoff video for you guys to see, to help you understand the cycles and the phases you're in. But essentially what it is, say for example you got a breaker structure and you entered here, or say you entered here on the safer entry. Say you're in this trade, right, and you see a pullback and you start worrying, and say this pullback extends a little bit more than you would like, but in order to invalidate your trend, you need to have the break of these highs, right? Because once you get a break of these highs, then you start to question whether price is reversing on you or not. And remember in the last video, the only way to confirm it, if price, say for example, if price broke this high, right? The only way to confirm it is to have another high. That's going to be a confirmation of a change in trend, right? So that's what you need to focus on. So say for example you are in this trade from this point, and say you're running very nicely and you see these pullbacks. Should you close the trade? No, you shouldn't close the trade on the pullback unless you have a reason to. So your priority as a trader is finding where you're going to enter and where your stop loss is going to be. Your TP is not overly important at this point. Your TP is something that you could think about afterwards, after you're actually in the trade. Okay, you don't need to worry about that just yet, which I know sounds a little bit bizarre, but as long as you know what direction you're heading in, you can follow the money, you can follow the structure. Okay, and that's one thing that I want you guys to focus on, is following the money, following the structure. So what we can see is we've not had a change in trend, but here, so we've had this new low being formed, then we broke this high. Now at this point, when this happens, you're probably thinking, okay, at this point you're thinking, oh, there's possibly a change in trend. How do you confirm that? You would mark out your levels, you mark out your range, right? And you can see what breaks. So now the high was broken, and you know that price is going to pull back and then probably continue, okay, because you've just broken the high again and it's grabbed liquidity, right? So at this point, you're probably going to consider closing your trade, or closing majority of your trade and leaving a runner. That is up to you how you wish to do it, but that is a good indication of should you close the trade or not. So say for example, if you're in this sell and say it's dropped, like, I don't know, you're probably running a very good profit, you can move your stop loss obviously above the highs and trail it, or you can wait for this change in trend to happen. It doesn't matter what time frame you're following. Say for example you did this on the 1 minute time frame, right? Say this is the 1 minute, right? And you're trading, you take a sell here, because markets are running in phases. You've got distribution, accumulation. Okay, simple as that. But as you can see, we don't have to label it, because Wickoff is just structure. Just remember that it's just structure. Don't worry too much about labeling what's the spring, because we won't know what the spring is until the accumulation or the distribution schematic is actually over. We won't know what the UTAD is. We just won't. Okay, we need the whole phase to finish. But if you're focusing too much on on labeling, you're gonna miss what's actually happening. You're gonna miss the structure. Okay. And more importantly, you're not following the money, and that's the main thing. So just picture that in your head. So let's go over this one more time just to reiterate everything that's been said. So let me get rid of that as well. Okay, so let's talk about this again. So you're in this trade. Okay. So you've got two entries, right? You've got entry number 1 and you've got entry number 2, right? Now you're in this trade and you're very happy that you're running in very good profit. You know, you've got no reason to close the trade until suddenly you go, oh, what's happened? Your structure's been broken, right? So anytime, say for example, and to be honest, practicing speaking to the chart, I know it sounds a little bit bizarre, but I do it as well. Practicing speaking to the chart and understanding what's going on is probably your best bet. So you're happy because these highs are being respected, they're not being broken, right? But what's happened here? Whoa, it's grab liquidity. It's either a grab of liquidity or is a change in trend. That's the two questions you're going to ask yourself. Is this a grab of liquidity? So let's write here. Is this a, why is that capital? Is this a grab of liquidity? Sorry, can't spell. Or is this a change of trend? Simple as that. So those are the two questions you're going to be asking yourself at this point. The only way you're going to confirm, which you guys should know by now, is if price does this. If price breaks that high again. Okay, if price does not break that high, if price does this instead, if price continues to go lower, you're golden, you're fine, you don't need to worry. But if price decides to break that structure again, then you're most likely having a change in trend. An accumulation schematic is starting, potentially, or you're potentially in the middle of one or the end of one. Okay, the different phases of a schematic. But that's the only time that you need to be worrying. Well, not worrying, that's the only time you need to be wary of where you are in the market. So that's how you should know, is at this point, when price starts doing this, you should be probably taking your partials or closing the trade fully. Doesn't matter what time frame you're doing, but be respectful. But say, for example, you're using this on the hourly time frame, okay, you're going to follow the structure on the hourly time frame just to understand it, right? But obviously the lower time frames, you'll get this happen. This will happen time and time again. Depends if you want to be a scalper or what. But the higher time frame, say for example, these moves will be a good few hundred pips on the higher time frame, like the 4 hour or the daily. So it doesn't matter where you find it, it's it'll be better for you. And I'll discuss in another video how to actually catch like these big swings by understanding the fractal nature of the market. But this is understanding when how long should you hold your trade, right? Because in terms of TP, we don't know when market's going to change. We have to follow what structure is telling us. Okay, this is why I'm going to like drill structure as much as I can into you guys to help you understand what structure is actually like how key structure is. So essentially, you're going to close this trade or take partials if you get another break of structure. Okay, because if you get another break of structure, it confirms that price is probably going to start changing. However, if it just clips the high and then comes back like this one, okay, it's just a liquidity grab, which is fine. So remember, above every single lower high has been made, there's liquidity. Okay, so price can come and wick up here whenever. Okay, but don't be worried. Don't let that concern you. You only be concerned. You only need to be worrying about closing your trade is if the high, that grab liquidity, gets broken again. If that gets broken, you're going to think about closing your trade. Same thing about if you're going for, if you say you're on a buy. So let's do this. Okay, say you've entered either here or here. Okay, perfect entries, and let's go. So we keep going, and say you get this. Okay, what's the first thing you're gonna ask? Is this a liquidity grab or is this a change in trend? But then price does this, it breaks structure. At this point you're like, okay, that was trying to scare me. Don't worry about it. And then what happens? You carry on the trend, and then is this a change in trend or is this a liquidity grab? It's a change in trend. That's your answer. And then you can actually close your trade, and then you can look to enter. You can look to enter here. So, just be relaxed and follow what structure is telling you. Structure is key. OBs are only your entry, okay? But structure is essentially what you're trading. Doesn't matter what time frame you use, it's structure. Structure is key. As long as you can understand structure and understand what is actually happening in structure, then you can succeed in smart money concepts alone, just based on structure. In terms of entries, entry is simply an OB with good confluence, such as the imbalance and momentum. Other than that, you're just trading structure. So I hope this helps clear things up as to how long to hold a trade for, and how to understand what phase you are in the market. But for now, I'll leave you guys be. I just want to let you know again, we still do have spaces for our bootcamp next weekend, actually, Saturday the 23rd and Sunday the 24th of January. Visit our website to actually find out more. So we do have spaces, and the discount code is, what was the discount code? 1k subs BC, which will give you £500 off our bootcamp. And with that, you'll get full access to our community group, where you can have full access to everything that we actually provide here, and access to all the mentors. Well, there's only 3 of us. You'll have access to me, Ben, and James. But for now, I'll leave you guys be, and I hope you enjoy the rest of your weekend, and trade safe.